morning. Welcome to IG's early morning call. It's Tuesday, the 7th of March, 2023. Let's take a look at the headlines as the currency markets await day one of 2 days of testimony from Jerome Powell, the Federal Reserve Chairman, as he prepares to deliver his speeches across the US legislature over the next couple of days. The US dollar is subdued ahead of that speech. And meanwhile, the UK retail scene remains volatile. According to the British Retail Consortium, there are concerns around energy prices and taxes keeping a lid on spending. But nonetheless, we are still seeing spending on the high street. Talking about spending on the high street, Greggs benefiting from money going in once again. Their full year earnings out today, a very robust set of numbers. Broadly speaking, it's meeting the already expanded profit forecasts. And the company is moving into other areas of the market that it sees as potentially profitable. Take a look at volatility as we see a continued trip on the way down. We're now below the 20 level, below yesterday's candle in its entirety. There is a very thin, slim candle this morning, but broadly speaking, we're at the lowest levels we've seen since the 2nd of February. So we're at 1 month lows now for volatility, which would explain why we're seeing record highs in France. This is the French markets here. This is the CAC 40 leading on this because it was another new all-time intraday 24-hour market high yesterday over the last, 12 or 14 hours or so, in fact. And that tipped out at 74.02, expecting a slight gain at the start of today's session. Talking about the continent, I just wanted to look to see what's going on the German markets because we've got another push higher there this morning, up 32.75%. From the lows that we had back in October last year. We're now there at levels not seen since the 1st of February last year. So 13-month highs now for the German DAX as we see a continuation of money going in to those continental markets. London markets, a couple of companies coming out with earnings this morning. We're now on the way down, interestingly. As we'll see, we've seen a really robust number coming through from Halifax house prices. We've seen a positive expectation on earnings from Premier Foods. Yeah, you know, it's only a 250 listed company, but there are some pockets of interest in these markets this morning. And as we'll see today, also potentially some positive news coming out of Greggs this morning. So the FTSE now looking as though it could well edge down a tiny touch at 79.31. But nonetheless, markets broadly speaking holding on to some of the recent gains. Take a look at what's been happening overnight in Asia Pacific markets as we see gains in Australia and on the Nikkei 225. Once again, a little bit of a loss, 0.75% down at the moment for the Hang Seng stock index. I want to show you the Japanese markets because that rise there, despite the fact it is only a quarter point, we are so very close to breaching this high we had here back in November last year. And when we get beyond that, that's when the markets then tip into levels then not seen since September last year. Not quite there yet, but you can see this is a very robust and at the moment at least continuing to see a continuation of this upward trend in the Nikkei at 28,317. If you're long on this market, stop goes down below the sort of 28,000 level if you're long on the Nikkei. Wall Street closed last night, just to quickly wrap what was happening on the markets there. We saw gains pretty much across the board. That wasn't until the last couple of hours or so of trade yesterday when we saw the Nasdaq dip down. But I think if you look at the 24-hour markets, and you can see this quite clearly on the 24-hour markets, you had a green candle there yesterday. As I said, we saw gains overall until late in the session, and that is the shape of the candle here with that big wick on the upside, taking us there to levels not seen since the 16th of Feb, before that reversal came in. And as I said, we saw that small drop on that decline on the cash session yesterday. Red candle here at the moment at 12,327. Just want to look at what's going on the broader S&P 500, holding on pretty much to the gain seen yesterday, well over the 4,000 level for the S&P 500. All this coming as you await the day one of Jerome Powell's testimony. Little moves in the currency markets ahead of that speech later on today. Traders are waiting the first part of that speech to begin sometime mid-afternoon UK time. The US dollar has been sliding since Friday and is closing in now on a 1 week low. I want to show you what's going on with the dollar basket because I think that goes to describe the situation quite nicely. I'll talk about how to trade this in just a minute. We're just about to breach the low levels we saw back on the 1st of March. So looking as though in the next period we could well see a possible breakdown to levels not seen since February. We've got the testimony before Congress on Tuesday. and then Wednesday will largely dictate currency market moves, I think, this week. The Fed chairman is likely to express heightened concerns around inflation, but economists think there's little chance that he will indicate the possibility of going back to a 50 basis point rise at the FOMC next meeting, which is on March the 22nd. How to trade this? It's long euro. And that is the trade at the moment. Nice little rally going on here at the moment. And in the session today, we have now peaked above the highs we saw back on the 1st of March. So we are holding on to levels that we saw yesterday, breached back up the 20th of February. If you're long on this, stock goes underneath the underside of this rising line of support. At its last two meetings, the Fed raised interest rates by 25 basis points. Let's take a look at one of the other big bits of news out overnight coming through from the Australian economy, where we saw the Reserve Bank of Australia come through as expected on interest rates. Currency markets are revolving around what's going on with the Australian dollar. Interest rate rising by a margin of 25 basis points to 3.6%. Now, that doesn't look high in the grand scheme of things, but we are now at two-decade highs for this interest rate picture that we are at the moment. It was widely expected this was the move, 10th increase since last May. In its statement, the RBA changed the reference to further rate increases, saying instead that further tightening would be needed. I'm not quite sure what the difference is in that, suggesting that it might be nearing the end of its rate rising cycle, maybe. I mean, it's such a tiny move in semantics, it's difficult to know precisely what it is they're trying to get at here. But the end effect of this was, in fact, we saw the second day in a row of declines for the Aussie dollar against the US dollar, down and hitting this line of support that we haven't seen since the lows we had back on the 3rd of January this year. So pretty much evaporating all of the early gains we saw on the Aussie against the US dollar. Since then, there has been this move down. 67.14 is where we are. 66.88 is the line to break. And if we get down to those levels and beyond that, we're then down at levels not seen since the 23rd of December. We're staying in Australia for the next bit of economic data we had overnight. A trade surplus narrowing to $11.69 billion in January. Of course, you remember that Australia is a really big exporter of commodities. This was the smallest trade surplus since August last year. Exports rising 1.4% from the previous month, less than imports, which increased 4.6%. So it was expansionary in terms of overall trade, but it's just that the imports somewhat moved over on the export numbers. Meanwhile, China imports out overnight and exports both shrinking further in the first 2 months of the year. Exports for January to February shrank by 6.8% from this time last year, while imports declined by 10.2%. China posting a trade surplus of $116.9 billion in January to February, compared with $81.8 billion surplus in the poll that was expected. Now let's move on to what's happening on the UK economy, because we've seen two bits of information. I want to begin with a slightly subdued one to begin with. British retail sales climbing in February, but once again, volumes remaining down on this time last year. The BRC, British Retail Consortium, reporting that spending in store chains increased 5.2% in annual terms last month after a 4.2% rise in January, well below the 6.7% rise in February 2022. Trading conditions remaining volatile, it said, as consumers worry about energy prices and taxes, which are set to rise further in the month of April. And this is keeping a lid on consumer spending to a degree. Meanwhile, the Halifax house price index of February has been an absolute blast. It's been released this morning. The index unexpectedly rose in February by a margin of 1.1% month on month. The markets had expected a contraction of a 0.3% fall. Now, year on year, this means that if you own a house, on the average, it's risen by a margin of 2.1%. That was unchanged in the previous month, but nonetheless, at this part of the year, many will doubtless be surprised at this rise. And what this is being attributed to is the drop in mortgage rates, which have come down recently. And that has meant that there's been a little bit more interest in these markets and people pushing through with slightly better interest rates for their mortgages for their new homes. So it's been a positive result coming through, I think, there for the Halifax. German factory orders, just a quick update on what's been happening there in the month of January. Bit of a backward-looking number, up over 1%. Economists had seen a contraction of 0.9%, so that is better. But off the January highs, the December highs of 3.2% rise. But as I said, that's quite a backward-looking number. So That's the reported number coming through from the situation that we've got there in Germany. Take a look now at what's happening with Greggs. Full year numbers out this morning. Things looking really, really good for Greggs. Total sales up 23% on 2021 levels to 1.53 billion. Pre-tax profit up 1.9% to 148.3 million. We've got like-for-like sales in managed shops up 17.8%. Pre-tax profit up 1.9% to 148.3 million. Greggs has been one of these interesting stories, and it has really relied on us all getting back into the office. But look at the share price rise that we've seen. It has been on an absolute storm on this market. I want to expand this out just to show you what's been happening there. So we have broken this rising line of support, but the gains we've seen since the 28th of September 2022 to the highs up there are a whopping 70.9%. Record 186 new shop openings in 2022 and 39 closures. The estate growing to 2,300 shops. Total dividend up 59 pence from 57 pence last year. The company says it continues to expand in retail parks in central London as well as key transport hubs, targeting 150 net new openings this year, relocating some 25 shops this year. The evening trade is interesting. 500 shops now open until 8 in the evening or beyond. Further development plan for 2023. It's selling pizzas, chicken, goujons. That business apparently is now growing well into the evening, including sharing boxes. The strongest growing day part is now post 4 o'clock in the afternoon. People going home, I guess, getting something on the way home. Digital channels as well doing well. 1,270 shops now operating delivery services, about 5% of sales overall. Click and collect. Who'd ever heard about a click and collect sausage roll? But the Greggs app allows people to do that and to see pop-up menus and personalize their order. I'm just reading this from the RNS, but what Greggs is doing, it's responding to demand. And it's doing this in a very good way in which they can do it cost effectively. And they have these little shops that they can move around places to get maximum footfall. And they just shift staff around town, depending on where they want to point these stores. The stock will open at 27.40. If you're long on this, stock goes underneath this area down here at around about the 26.50 level. If you are long on Greggs going to the start of today's trade, if you think there's a chance that we could well end up getting a drop in the shares at the start today, your stock would go in this area up here at around about the 28 pound level. 27.40 is where we are. For my money, would think that this is going to go up at the start. That's not a recommendation, but just a thought, bearing in mind my read through of some of the headlines in Greggs. But we've had this massive run up in shares recently, benefiting the investor. Let's stay on the charts because I wanted to bring up another chart which I think could well react positively this morning. This is Premier Foods, the FTSE 250 listed food manufacturer. It opened at 114.6. Third quarter trading statement today. Premier Foods now expects revenue growth in the fourth quarter to be at least 10% ahead of the previous year. Trading profit and adjusted profit before tax for the full year are forecast to be ahead of the board's initial expectations. And I think this could well be why we could well see a lift at the start from 114.6 pence. Meanwhile, the business rental company Ashtead raising its full year earnings forecast to group posting an adjusted pre-tax profit of $535 million and revenues of 2.43 billion. It reports in dollars because it's really big in the American market. AHT is the ticker for Ashtead Group, and we've seen recent highs. And in fact, we're just in today's session assuming we get another move up in shares, which could well be the case as a result of the numbers this morning because they're looking particularly strong. Then we'll take it back to levels that we'll see there not seen since January 2022. So we could well creep up to new 13, 14-month highs at the start of today's trade if we do see a gain in Ashtead Group, another company that seems to be doing quite well. On the way down, I have to say, is Reach. Let me just bring up the RCH ticker for Reach Group, which doesn't now seem to be working. REACH. Let me bring up the share price chart because Reach, which was formerly Trinity Mirror, it owns the Daily Express as well, is in all sorts of trouble. No one really buys newspapers in any large numbers anymore. Advertisers don't really like the medium. Posting a 27% drop in annual profit after inflation caused its operating cost to rise by a whopping £40 million. Demand for advertising has been weakening across the board. The publisher reporting adjusted operating profit of £106.1 million for 2022. Revenue 604, down 2.3% on the previous year. I don't know which way anybody would read this in a new positive light. We'll have to see how the stock opens at the start. One company that could be on the way up today is John Wood Group. It says Apollo's proposal at 237 pence per share undervalues the company. This is a subject of a couple of interesting sort of overtures, I should say, recently. Got that big rise in stock when we saw that back on the 23rd of February. It's been holding those gains at 194.4 pence. That red dotted line is the Apollo proposal at 237 pence per share. Are we going to get a bidding war for Wood Group? Well, we'll have to see what happens with that in the longer term. Staying on the charts, just wanted to update you as well on what's happening in Meta Platforms, the company that owns Facebook. According to Bloomberg News, Meta is to cut thousands of jobs as soon as this week. The new round of job cuts is being driven by financial targets and is separate from the first round of cuts at the end of last year. Then Meta parted with 11,000 employees. Meanwhile, Meta's lost a bid to end a lawsuit in Boston federal court claiming it stole confidential information from artificial intelligence startup Neural Magic Incorporated. Not quite sure what time that came out yesterday, but this is an all-session stock. It'll open at 9 o'clock this morning at $186 the share. Meta will have to face a trial over accusations that it took Neural Magic's breakthrough algorithms that enable AI systems to process information more quickly. Let's just round up in a couple more areas of the market to follow up on. Spot gold, it's going nowhere. 1849. What is going somewhere is the price of Brent and US crude. Today, we've seen it creep up again, and it is now at levels not seen since the 30th of January. Intraday today at 86.17. That's Brent. So far as US crude is concerned, we're up over $80 a barrel at 80.63. It's all about expectations, increased expectations now of demand from China, and a possible supply issue at the other end of the pipe, where people don't think we're getting enough oil coming through. We're still in this band between 72.65 and 82.65 on US crude. Once we break through that, we'll then be at levels not seen since November last year, a new high for the year. Is that going to happen soon? Could well be if we see this trajectory continue. Certainly, we're on a nice strong trend at the moment for the price of oil. That is it. 13 minutes to go before the start of today's European session. Lots to watch out for here in the UK. If you want to see some potentially positive reaction to that news coming through from the Halifax this morning, where we saw house prices rise more than expected, look at the FTSE 350 home construction index, because that could well be where we see some of the moves up if we see some of those house builders take heart of what we've seen today from the Halifax.